On the 24th of August 2016, President Uhuru Kenyatta signed into law an amendment bill to regulate the maximum interest rates that commercial banks would charge on loans and pay on deposits as well. Now, nearly 2 years on, there's been hue and cry over the adverse impact of that law. A report by the Central Bank of Kenya on the impact of interest rate capping on the Kenyan economy shows that the interest rate capping has first and foremost infringed on the independence of the central bank and complicated the conduct of monetary policy.
It is my view that why we have capping of interest rates today is because of what I would call massive policy failure. That over time, things that should have happened didn't happen. Mwai Kibaki in 2004 did not cap the interest rates, yet we were on single digit. Why? Because he went for the cause-effect relationship about the various options within the macroeconomic management of our economy that was available for him. So maybe if the right things are done, we may start to see a correction phase within our banking system. We need to make banks smile and happy by removing the caps. We need to make them cry by mitigating that with very draconian measures in other policy areas. Thank you very much.
2 years down the line, what has happened? Whether we have increased lending or access is an issue. To my best of my knowledge, the cap we have is draconian. It is really drastic, where I say so because ours has a ceiling and a floor. All caps in the world don't have both. We were alone when we were trying to fight Jude Jomo, but slowly and slowly we are getting more support. I hope so, and we hope we should be able to deal with this problem. Thank you very much.
Honorable Njomo, I'd like to start off with you. When we listen to regular Kenyans on the street, specifically maybe the ones who can access secured loans, they say this was the right move. Maybe just to start off this conversation, what did you have in mind when you proposed the bill in Parliament?
The main reason of moving that bill was because the banks had colluded, and the interest rates in Kenya, I think, were the highest in the world. And people were complaining that they want to do business, but they are being charged interest rates of 18% up to even 30%. Central Bank had also failed its duties in regulating the interest rates that were being charged. And like the CS have said, the introduction of KBRR did not have any effect because they were just marking up on the KBRR. If you compare the 10 most profitable organizations in the country, 7 of them would be banks. What does that mean? That we are killing other businesses and making our banks better and more profitable. So the time had come when we had to level the playing ground, where we have to let our wananchi, our business people, our SME owners be able to get loans that are affordable. The government is borrowing too much from the banks.
Yes.
So we are competing as wananchi. We are competing with the government on who is to get loan, who is going to get a loan. And of course, the banks will give the first preference to the government because they are certain that the government is going to pay back. The banks are still colluding, and they have agreed that they are not going to lend. They are going to cause a credit squeeze so that the government now can come to its side like it has done and try to persuade the parliament to remove the interest rate caps.
I would say two things. That one issue the industry agrees with Jude is that interest rates were high. There's no doubt about that. The industry has never said the interest rates were low. And I think what CS Rotich mentioned earlier is that there are structural issues we need to address. I personally don't believe that there's one sweep that addresses the issues we're facing on interest rates. And I think that's what we have a difficulty with the current regulation. There are many steps that the industry is facing that we need to address. So some have been identified before. We need to extend the access in terms of how many customers coming in, using more information. But for banks to collude, I will say that if we look at the pricing regime in the industry before the rate, many of our customers, and I want to go to the data that the minister mentioned, only 53% of customers truly were beyond the 14%. And I think what needs to be done more, and we had what we are welcoming is a conversation happening today to address the specific issues. What I find from our customers that I speak to many times, Terian, which is a big worry, is many customers say they need access to credit today at whatever price. That's what they always say. They have a business to run. And I think banks, people see the numbers because we're regulated and we're among the industry that publishes our results by law. That is a requirement of the Banking Act. There are many businesses that never publish their numbers. If you do, you will see different performance actually that happens. And I think we need to find a way to deal with the high interest rates today rather than dealing with one universal measure to cap every other industry where the credit portfolio risk profile is not addressed. That is the issue that I have a difference with the model. But in terms of the rates, I think the industry agrees very much with Julia. We need to address the issue of interest rates.
I think we are perhaps the most regulated industry in this country, and will continue to be. And beyond that, I do want to point out that banks actually adhere to regulation, not just in Kenya, but globally, for the fact that we trade with every bank around the world. Yeah? So we are highly regulated, and therefore colluding would be the last thing we would do. I think the fact is that the Cabinet Secretary talked about 1.23 million borrowing customers have stopped borrowing. That's a big number. Beyond that, the average loan amount during that time has grown by 47%. What does that tell us? It tells us the rich and the big companies are continuing to borrow. So what Honorable Jomo wanted to help, the SMEs, the individuals, those are actually the ones that are not borrowing in this market. So for me, it is to think about, I think Honorable and ourselves talk about the same language. We want to help SMEs. We want to make it affordable. We want to make it accessible.
The access to credit for our SMEs has been really bad. The engine of the economy is the SMEs, the entrepreneurs, and we need them to be able to access credit with which to drive and propel the economy forward. So I would say it has severely stunted their growth projections over the last couple of years. Getting credit, so there's two options. If they want to grow, they will borrow outside the normal banking channels, and they'll borrow at really bad rates, probably in the region of 28 to 36%. And that kind of Shylockian lending is simply not sustainable for a growth economy.
The conversation on interest rate caps is really a conversation about liquidity, and the fact that the majority of the private sector in Kenya, particularly micro, small, and medium enterprise, feel snubbed by the financial sector. That's why it's such an emotive issue, is that we're here, we're doing good business, and yet you guys have these labels that you put on us and you tell us that you're not good enough to get our money. So I think one of the problems with the interest rate cap has been articulated, that it did the opposite. And I was among the first people who were saying that this will lead to a contraction in liquidity, not an expansion. When you start limiting risk ceilings, people get into sort of a very cautious mode, and that's what we've seen. So I think the real concern is that there are two sides of the private sector going on here, as the gentleman alluded to. There are those who are arguing that you must repeal the cap so that we can get the liquidity going again, so that private sector, particularly small and medium enterprise, can get the money. But there are also smaller business players who are saying, no, do not repeal the cap. Because right now, what banks are doing are running to government securities because that's a safe space. But some are arguing that let them run. Once that saturates, particularly if, as the CS has mentioned, we may go through a phase of fiscal consolidation where we may see a contraction in the amount of borrowing government is going into in the market going forward. If that happens, the smaller players are saying that will saturate and they will have to deal with us. What is it about micro, small, and medium enterprise that is so risky And what can both sides of the divide do to bridge that impasse that we're at?
I think if you start from a legal perspective, laws should not be passed in vain. So let's even start with that. We can leave the economics and the debates aside. Laws should not be passed. So if we pass a law that 2 years later has not achieved what the effect was, we shouldn't say, like, let's dig deeper and wait for it to hurt before we can all do that. It hasn't. On the other side, one of the things that we've done, one of the reasons why it was predictable that wasn't going to happen, government had huge deficits and ongoing deficits. So if I was any banker, and remember that they're also accountable not only to their shareholders, to their boards, it would be responsible to lend to at the risk profile that is risky, when you can actually sweep the floor with these coins the government was throwing at you. So unless, and Honorable Jomo said that one of the things that his government is, you shouldn't be saying that you're pleading with the cabinet secretary to lend less. Just ask him to reduce the deficit. And you can do that as a legislator. All the responsibilities that the government of Kenya has, and they're huge, can be accomplished for much less than 2.5 trillion shillings.
Savers are earning more out of the bill, because previously they were earning about 3%. Now they are earning 7.5% because of the flow. So people are earning more. It's very, very unfortunate that there are very few people who save. But why do we want to remove the caps before those measures have taken place and we have felt the effect? We have suffered a lot under the banks. Why do we want to suffer one more year as we wait for those measures to be put into place? I have a responsibility, just like you said, I had a responsibility in reducing the deficit. I have a responsibility of protecting the people who elected me to parliament to go and make rules and to do oversight for them. So I still feel, yes, we may have to remove the caps, but the time has not come.
It's important to see the trend. What is the challenge I have with this conversation is that we want to cut it deep today and stop. If you look at the rates before, in 2015, rates were as high as 25%. In fact, when Treasury borrowing was at the all-time high, rates went up. And then rates started coming down from before the rate cap came in. You have to see it as a journey, it's a continuum. I mean, many times I see customers ask me and say, we want to borrow at LIBOR plus 2. So assuming LIBOR is 3%, plus 2 is 5%, they want to borrow as London. I want to borrow as great as UK. I ask my customers, well, which market are we? I mean, it's like, I ask them, what is the price of their train ticket in London versus a matatu in Nairobi? Because you're going to benchmark, each market has its own fundamentals. Now, banking, we can say is an art. The price of credit is a science. Because of the pricing cap, many customers can no longer qualify to be able to get credit. So they ask me.
But is there opening,
Yes.
or does that provide a space to have a negotiation or to have a conversation about how the banks actually, measure the risk profile of SMEs?
As shares as that, there's also a notion that is being created that SMEs are not accessing loan. That is what these two bankers have said. And I would like to correct their language and tell them, you say we are not giving SMEs loan.
First of all, I want to be very clear. Banks make money when they lend. The money we lend is the depositors' money. These people who are getting those 7% rates of deposit, that's the money we lend. And we have to make sure that they are able to come for that money when they need it. It's available. So we must weigh those risks very carefully.
When players in industry start behaving badly, a sledgehammer approach is needed. Government pays late, private sector pays each other late. Everyone, we've just gotten into the culture of paying late. And the retailers, again, need some sort of sledgehammer approach. The banking sector needs to up its game and start being innovative in this segment. And we create a whole generation of homeowners which will also propel a lot of the growth in the economy.
In the region, and I can put on record on the region, because we are in every country, Kenya still has the lowest interest rates today. Neither Rwanda, neither Uganda, neither Tanzania, neither the difficult country like in South Sudan, neither of them. The only country that we seem to be comparing ourselves now to is South Africa, which is around about 7-8%, and to sometimes 10% in local currency and Nigeria. So, and those economies have specific parameters. What I will wish to do for our customers, and why we are pushing for this, is not to get away, and perhaps we need to look beyond this. What can be done to deal with the risk if the amendment is made? Because there's no confidence, there's no trust that the banks will do the right thing. Maybe that's what we should discuss and say, what more mechanisms are there to enforce, a conduct within the industry, within the sector, that can ensure that customers don't get exploited?
I think it is very, very important for any industry to take into consideration our low-income earners. Because I believe for us to be able to move forward, for us to achieve the developments that we intend to, we must first and foremost think about Wanjiku. Think about the voter who brought us to parliament. He may not have much in terms of finances, but he pays his tax. And he expects that we are also going to take care of him. I would like to thank the CS Treasury because he has put some measures in place that may help to bring some discipline. Mohammed there said that he's very much against it. Banks don't want any regulation. They would like to stay in an environment where they are just doing what they want. But I think regulations are good, because if banks had run amok, the interest had run wild, and there were regulations, what would happen if we did not have a regulator?
Right.
Or what would happen when we have a regulator who is sleeping on the job? They will reap everything from their customers. So I would say yes, we need those measures to be put in place. But I think before we remove the caps, it is better we have the measures first put in place, we see that they are working, then we remove the caps.
Japheth Ogutu, you have a question. Please stand up and introduce yourself and direct your question to whichever member of the panel that you want to speak with.
My name is Japheth Ogutu. I'm the Executive Director at the Consumer Downtown Association. Consumer Downtown Association is one of the consumer protection organizations in the country. We stand in for the interests of consumers in the country. What really motivates consumer actually to operate a bank account or with a bank? There are very key issues. One, I would want to save perhaps to get some income later, or interest later, or rather some profit. I would also want to operate an account with bank, for instance, to access loan, or maybe to get some other services like mortgage and other attractive products that are available. But again, we see that really not coming out in the today's Kenya. The interest rates that were capped in 2016, September, a lot have been blamed on the capping. And I would want to point out a few areas. One, the banks actually haven't addressed ethical issues within banks. I would want to point out this very strongly because we are actually turning out the debate to the capping interest rate. We are blaming every frustration that the banks are encountering today on interest rate. In short, let banks address the ethical issues. There must be very clear measures to ensure we first tame the behavior of banks.
Thank you so much to all our viewers here and at home. Thank you so much for being part of this conversation. And this conversation continues online on Fanaka Digital and the Kenya Bankers handle as well. Well, let's meet again at the next debate, only on Fanaka TV, and we say we are strictly business.